Stablecoins are what the crypto market needs. Want to invest in crypto without having to stress out on its highly volatile market? Is that even possible? The short answer is yes. Stablecoins are the talk of the town for a couple of reasons. Join me as we get to know what these coins are, how we can capitalize on them, and how different they are with the other digital assets available in the market right now. Hi, this is Joe, and welcome to Joe Blows Crypto, featuring our very own Mr. Know-It-All. Hi, Mr. K. As promised, I want to ask for your opinions on stablecoins. For sure, you've been hearing stories and opportunities about these coins as well.
In the crypto community, it would not take long to discover new things and developments because every hype immediately spreads like wildfire.
This is another enticing entry for people who do not want to deal with the risks associated with the crypto market.
This is why we are so interested in crypto. Not only because it is another way to gain profit, but limitations are always challenged by new projects and systems powered by the blockchain technology. But as early as now, let me tell you and our viewers that putting your money in stablecoins still does not guarantee success and millions overnight.
Breaking the expectations right away, huh? Would you agree, though, that this is safer than trading the other hyped cryptocurrencies in the market?
I would say that the risks are better controlled with stablecoins. Why don't you start with your questions to enlighten our viewers as well?
I think we should start with the basics. What is a stablecoin? How did it even start and penetrate the digital assets market?
By definition, stablecoins are cryptocurrencies whose value is pegged or tied to that of another currency, commodity, or financial instrument. They aim to provide an alternative to the high volatility of the most popular cryptocurrencies, including Bitcoin, which has made crypto investments less suitable for common transactions.
So that is probably the main reason why a lot of people are kind of going crazy about stablecoins. Its association with another financial instrument.
Remember how we talked about other traditional investors doubting the possibilities in the crypto market because the prices are merely driven by speculations only? We all understand the skepticism, but stablecoins changed the game somehow by serving as a medium of exchange. Traders, especially those who have been doing this for a long time already, know how to make an opportunity out of the market's volatility. But merchants, buyers, and sellers of crypto wish to have a more stable routine transactions, hence supporting the idea of stablecoins.
Since crypto is not a legal tender, it must retain a relatively stable value, am I right?
That is correct. If it is going to be a medium of exchange, then it should provide assurance to those who are going to receive it that its purchasing power will be retained in the short term. For example, we agreed that I will pay you with crypto for the service that you have provided to me. If I will send you some Bitcoin, which is now a common way to pay for goods or services, it is very likely that you will be taking a loss the moment you receive the payment, as prices of crypto can drastically change any time.
So that kind of risk is somehow eliminated because of stablecoins? Transacting with these kinds of coins will give buyers and sellers better assurance that the value of what they're receiving will be stable? Wow, the name stablecoins actually have a literal meaning to it.
By the way, how could I forget to mention that a stablecoin is another utility token built on an existing blockchain? If you are still using the terms coins and tokens interchangeably, then you can find a deeper explanation in our previous video. If you watched that one already, tell us what you think about it. Which is more important between the two? Comment your thoughts below.
That's the trick question, guys, so answer properly. Anyway, moving on to my next question. I am curious to know how stablecoins work.
Good question. Now that we have a better understanding of what these stablecoins really mean to the crypto users and supporters, let us now talk about the technical side. There are actually 3 types of stablecoins.
Will this make this learning process a bit more complicated?
Not really. At the end of all these, everyone will have a better understanding of what is the real deal about stablecoins. Since I have already mentioned that there are 3 types of it, let me now talk about fiat collateralized stablecoins. According to Investopedia, these stablecoins maintain a reserve of fiat currency or currencies such as the US dollar as collateral, assuring the stablecoin's value.
Simply put, it is backed mostly by US dollars or other countries' currency?
Yes, mostly by USD, but in some cases it is also backed by gold. Do tell, what do you think is the most popular stablecoin in this class?
Oh gosh, treating me like a student here? But just an FYI, Mr. K, how many times should I tell you that I'm not a complete noob in this market? But whatever. The answer is Tether USDT.
Come on, I am just trying to play with you. But yeah, like what you have implied, that is not really a hard question. I bet that our viewers also know the answer to that. But since we are talking about security in the cryptocurrency, I want to briefly talk about Ledger Nano X, a compact and on-the-go hardware wallet to store your private and public keys. If you are interested to know more about this, then make sure to click on the link in the description box below.
Alright, I think it is time to talk about the other types of stablecoins.
The next one is crypto-collateralized stablecoins. Obviously, this one is backed by other cryptocurrencies. Some of you might think that it is ironic since crypto is highly volatile and stablecoins are created to avoid that volatility as much as possible. That is why the value of cryptocurrency held in reserves exceeds the value of the stablecoins issued. Lastly, we have smart contracts or algorithmic stablecoins. It says that these stablecoins may or may not hold reserve assets. Their most distinct quality is their strategy in keeping the value stable by controlling its supply through an algorithm, basically a computer program.
Sounds like a bit more volatile than the first two.
Because that is really the case. I know that you and our viewers are now getting curious if getting your hands on stablecoins would be a smart decision.
Now that you brought it up, I am curious. What does the future look like for stablecoins?
Like the crypto market in general, stablecoins would not be able to escape the laser focus of the regulators. With the way it garnered attention and users ever since it was introduced in the market, it will likely affect the financial system in a broader scale in the coming months and years. They want stablecoins to be regulated just like clearinghouses and payment systems. Well, if stablecoins continue to be developed and reach more users, then this will not only be generating attention, but also millions of dollars as well.
Are you suggesting that buying stablecoins is a smart move at this point?
I am not saying that you should put all your money on buying stablecoins because at the end of the day, there is still no guarantee that you will be gaining profit from the money that you will use in buying stablecoins. These digital assets are not as secured as banks. So if you lost your investment there, then that is it. Additionally, though they claim that these stablecoins are tied or pegged to another commodity, there is no way to prove it yet. Many people actually worry that Tether is not backed by real tangible cash. If you are looking to add some cryptos in your portfolio and earn through trading them, then it is much better to actually get involved in the popular cryptos available in the market. Though stablecoins promise lesser risks and higher security, remember that it is still crypto you are dealing with. What you will be relying on in making decisions are still speculations.
Thank you, Mr. K. I thought the recap was on me, but you pretty much summed up your discussion already with some warnings as well. What I can add to that is to not always ride the hype right away. You can still capitalize on these opportunities without putting a huge dent in your portfolio. I hope you guys enjoyed listening to Mr. Know-It-All as much as I did. If you want to learn more about crypto-related topics and discussions, make sure to hit that subscribe button and click on that bell to turn on your notifications. Excited to know what our next conversation will be about? Then join us in the next videos. No stones would be left unturned with me, Joe Blow, and, of course, Mr. Know-It-All. We'll see you on our next one.